Well, good morning. My name is Amber Nunnery. I'm the SFMS trainer, and I get to talk to you just about some general T-code information this morning first. So, what is a transaction code? Well, a transaction code is a 3-character code that determines the accounting impact of financial transactions in R-stars. They're also referred to as T-codes, or you might see them in our writing as just the words TC. So why do we use transaction codes in R-stars? How can a 3-digit number be the accounting information? Well, they're really just designed to simplify things. Transaction codes simplify transaction entries and keep accounting records in balance. Using just one transaction code, all general ledger accounts for a dual accounting system are posted. It's pretty awesome. But how do I select the right transaction code? There is a bunch of choices and it can be just a little bit overwhelming. So the key is figuring out what is happening in the transaction that I need to make. And that's what we're going to go over in our training today. So what's happening? Are we making an expenditure? Did we receive revenue? Is this a transfer? Do I need to make a correction? Do I need to make a journal entry? Or is it some kind of financial statement type of entry? Goodness. All right. But during today's training, we're not going to be covering all of these topics, but please refer to basic T-code training for more information on recording revenue for deposits in AR and expenditures accounts payable. So how can I narrow down my choices? When I know what I want to do with my transaction, SFMS and the Oregon Accounting Manual and R-stars has a bunch of tools to narrow down the right choices. Seen over here is just a general outline of where I might look for T-codes, and it's from the Oregon Accounting Manual. But do note that there are many T-codes that fall outside that range. It's just a general guide. So if there's tools, what are they? Because I need all the help I can get in finding the right T-code. We have a general ledger list, and we're going to look at that. Or you can go to the D31 screen in R-stars. We have a comptroller object list, or you can look at the D10 screen or the D11 screen. You might use the T-code spreadsheet. It's awesome, and it's my favorite place. The 28A and 28B screen in R-stars give you so much information about each T-code, but we also have a handy 28A and 28B handout that explains all of the million lines. There's literally like a million on those screens. And then you might order the DEFQA 10 report in R-stars. It's going to give you some more information about T-codes. And we also have the R-stars training manual. There's a bunch of information there too. So instead of just naming off a list, let's look at some of those individual pieces and talk about what they are and how you might use them. So the general ledger list. So we've thought about what's happening in our transaction, and then we can go to we've determined maybe what we need to do with it, and maybe we've determined an ideal general ledger account that we need to hit. Or we're just going to begin to think through it. So on our website and linked up there, we have the general ledger list. And on it is it's a spreadsheet with all of the general ledgers that we have, but it has a bunch of filters at the top, and you can use those filters to narrow it down, or you can use my favorite, Control F, because maybe I know I need to make an expenditure. And so I'm going to put expenditure in, and then I'm going to find all of the general ledger accounts that use the word expenditure, because what I need to find is my expenditure control cash. I maybe don't know what GL it is off the top of my head because I don't have all of those memorized, but I can put it into my filter and I can look and find it. And so you can look through them all. You could also find what you think might be the right general ledger list to hit, and then check out the OAM listed there, 6010. It's going to give you the list, but it's also going to give you the definition. So you can use both of those together, but the general ledger list is a great way to quickly go through all of the options for general ledgers. All of the information is on our D31 screen for general ledgers and R stars, and you can move through all of them. So you could go to the D31 screen and you could press enter, and then you could press F5 and move through all of them. They're all in there. And then after you've decided on a I'm going to slow down. Sorry, guys. After you've decided on the general ledger and you've narrowed down your choices and figured out which one you need to hit, then you need to figure out what comptroller object you want to use. Many of our T codes require a comptroller to classify the object of the transaction. Not all of them do, and so you might not necessarily need one, but many of them do. So we have this comptroller object list for you guys to use. And again, I just want to show the demonstration of it. There is all of our comptrollers are listed in the spreadsheet. You can filter it. So maybe you're just looking for revenue and you want to filter by revenue, then you could do that. There's also, I can clear that. And again, I can just use my Control F. Maybe I want to search for the word SPIDA, and I know that I'm looking for a comptroller that'll go with my SPIDA entry. I'm just going to put SPIDA in there, press enter, and then arrow through and find all of the options for my SPIDA entry. It's pretty nifty and super helpful. So then maybe I found one that I think would be right, but I'm not positive. Again, OAM 6030 is going to list all the comptroller objects, but it's also going to give their definitions. So that's a great place to double check and make sure that I have the right information. Comptroller objects are also all within R stars. They are located on the D10 screen. You would just start with the appropriation year, press enter, and then you could move through all the comptroller objects in R stars. But I did want to point out that many agencies, instead of using comptroller objects, classify them at a lower classification, agency objects. And those are all found on the D11 screen. So you could go to the D11 screen and then you could put in your agency object that you know you're using, and it will pull up what your comptroller object is. And then you will be able to use your comptroller object to narrow down which T code you want to use. So just keep in mind, if your agency uses agency objects instead of comptroller objects, you want to head to the D11 screen and figure out which comptroller object your agency object rolls up to. And then the T code spreadsheet is super handy. I think it's my favorite. So once you've decided at least one general ledger that you want to use, you've thought through your transaction and you've decided maybe it's an expenditure and I need to hit GL 3500 expenditure control. I can narrow down my options for comptroller objects and pick one of those if that's applicable. The T code spreadsheet is a great tool to arrive at the right T code. So let's look at it. So if I put my GL in at the top, let's say I wanted to hit GL 1728 for subscription-based IT obligations, and then I need to use the comptroller object 1701. I'm just going to put those into the yellow boxes at the top, and then I'm going to filter it to only allow the true results. I don't want false. It doesn't work for my T code. I want the true ones. And I can see that there's just one choice left. It's 462. And so that would be the T code that I would need to use if I'm going to hit GL 1728 and use comp object 1701. But let's go ahead and clear those. And maybe I need to hit GL 0065 unreconciled deposits. I'm going to again go back and I'm going to clear my results to where it only shows what is true. And I don't have a comp object. I don't know what I'm going to use yet. So I'm going to filter that. I'm going to go and change the status code. I only want the active options. I don't need any inactive T codes to sneak in there. And then maybe I've decided, because that's a whole bunch of options, that I know I need to be able to reverse this T code. So then I'm going to just check the R and the blank. I don't want any N options because I know I need to enter a reverse. And that would narrow it down further. There's a whole bunch of columns and all of them have different meanings. But as you use the columns and you use the spreadsheet, you can begin to narrow down all of our millions of T codes. There's not really millions, but you can narrow down the options for what T code I should be using. So the T code spreadsheet is a great place just to filter and to figure out what are some options to use, what T code might I need. And then the 28A and the 28B screen are a great place to take the information from the T-code spreadsheet and really, really look into what else is there. See if you have the right choice. There's also our cool 28A and 28B screen handout, which we talked about, but that goes over each of the little lines on the 28A and 28B screen, and it is super helpful to have up when you're looking through this. Let's say that I needed to record revenue and I looked at T code 190. I can see which GLs it hits. It's going to tell me information about all of it. I can press F6 and go and look at that 28B screen, and it's going to give me a summary of everything that this T code does. It's going to show me all of the comptroller objects that I could choose for the T code. It's going to show me all of the document types that I could use, and it's going to show me all of the batch types that I can use. And so the 28A and the 28B screen are going to just give me all the information. Let's look at 462, which was the other T code that we looked at earlier to establish the SPIDA. And we can see that one GL is open. And so then go to the 28B screen and you can see these are all the options that I could use for an open GL, and it lists it right on there. And then it lists the comptroller objects and again the documents types and the batch types. So it just gives us all of the information for each of those T codes and why we might select that particular T code. So that is a great tool to use to make sure, okay, I've selected a T code. Is this the actual information? Is this the right one? Does it have the stuff that I need to make the entry? There is also the DAF QA 10. It starts, it's a report that you can order in RStars, and you can order it on the 91 screen. Over there is listed just what you would need to enter to be able to order it. But it starts with the GL account, and then it lists all of the T codes that hit it. So maybe you're a paper person and you want to print it out and order it. It's going to list the GL account, and then it's going to list any T code that might hit that GL account. So maybe that's where you want to start. It's a great tool as well. But what if after I've used all of those things and I still can't find the right T code? When you're researching what transaction codes to use with the tools from the prior slides, typically you're actually going to end up with multiple possible T code options that impact the general ledger accounts and the comptroller objects you need for those transactions. But if you can't find any transaction codes that allow the GLs and comp objects that you want, first, just make sure that you understand the desired result of the transaction. There really are T codes and RStars to cover almost every scenario needed for agency entries. But maybe it's multiple entries that are needed to be made to get the desired end result. Maybe consider if you'll need to use more than one T code to make the entry, but also don't forget that some of our T codes result in a system generated entry. We already kind of touched on T code 190, but it generates automatically T code 332 once the deposit reconciles with Treasury. So maybe what's happening is there's a system generated entry, and that's why it seems like the GLs that you're looking for just don't match up. So my suggestion would be maybe reach out to others within your agency. If they've already made the entry, they might have a suggestion, or you can always contact us, your SFMS support analyst, to ask for assistance. We'd love to help you out. And then let's just talk a little bit before you make your entry. You need to confirm, first of all, that you have all the required coding and the correct user class to make the entry. So you've looked at the 28A profile transaction edit indicators, and it shows you which fields are required. And then just depending on your agency's accounting structure, you might have additional fields that you're going to need to enter. So you might want to check that. And then the 28B profile will indicate what document types and batch types you can enter for that entry. And then your user class actually indicates whether or not you have the appropriate security in RStars to use the T code you selected and make the entry. But because I have no idea which user classes, which T codes I can use with the user classes that I have, go back to your T code spreadsheet, and at the bottom, there's a tab that says use list of user classes. And click on that tab and put that T code up in the yellow box at the top and press enter. And again, filter your results to just true, and it will give you a whole list of user classes that can be used with that T code. And you can then check, this is the user classes I have, this is the T code that I want to use, and if it works with your entry, or if somebody else is going to need to make it. So in summary, when we're using transaction codes, there's just really 4 basic steps that we're going to go through today over and over again to help you find the right T code. So step 1, you're going to identify the type of transaction that you want to record. And then step 2, you're going to use all those research tools that we talked about to narrow down the possible transaction code options. And then step 3, you're going to pick the transaction code that is the best fit for your transaction. And then step 4, make sure you have all the required coding and the correct user class to make the entry. And that's it. Easy peasy every time. Not that easy, but it is the 4 basic steps that we want to go through. If you need more information, there is RStars training. Check out our RStars training manual, or I am an avid supporter of the RStars training program, and take it and learn more about transaction codes. Are there any questions? Awesome. Well, I do not see any. So, Trudy says, I missed what an OpenGL was. Trudy, OpenGLs, some of our T codes have one of the debits or one of the credits left open so that we can use multiple options to enter using that T code. So it would, on the 28A screen, you would see that there's a blank where it looks like it should be filled. And then you can go over and press F6 to the 28B screen, and it's going to show you all of the possible options for that T code that you could input a GL when you're entering it on the transaction entry screen. That way we can use one T code to do multiple different types of transactions. All right, I'm going to pass it over to Maria Berglund, and she is going to do payroll.
Hi, good morning, everyone. We are going to continue with one of the most fun subjects, payroll, right? All of us need to get our paycheck. So all the transactions need to clear the 530 screen. So we will go through the T codes will come by payroll and how we need to clear the errors to clear the 530 screen. But before dive in, I like to start with some icebreakers, have some fun fact. And Amber, if you launch our poll. So it should be a little pop-up on your screen. It has a question on it. You can select your answer. Question is, to which ancient civilization can the earliest known payroll system be tracked? It's very important, right? When does it start appear in our civilization? So you can select your answer and then hit submit. I'm going to do that too. There you go. Looks like we are done. Everybody answered. No, we have some going through. Just, yep, 97 responses. We are 144 people, so we'll see. Since everybody is thinking about it and responding to this question, it is interesting to know the form of the payroll actually was daily rations of beer and grains. And it was beer because it was one of the staple of diet in old civilization, because considered as a safe beverage. And this back to 3,500 years. So as you see, we were pretty advanced, even 3,500 years ago. Okay, I'm going to close this. Looks like we have 111 responses. You can hit done. And correct answer was Sumer. So Sumerians were the first civilizations to start the payroll system, like as a systematic in the society, which is great to know. And just adding to this, on your toolbar, it's a polls. So after React View Notes, you will see polls. So if you hit that polls, you can see the final answer as well. Okay, so how these payrolls appears on our stars, they will appear as batch type 8 and 9. Batch type 8 would be for the actual expenditure for payroll, and it will automatically clear from 530 screen over nightly batch cycle. But batch type 9, if doesn't clear and bounce back by errors, have to be released by users. I put user class 2729, but it's these are the most common user classes it get used to release batch type 9. And if the transactions pass all the edits, they will post to the financial tables and clear from the batches as they clears out. And the ones that have errors on them, they will stay on 530 screen. So our first T code will come through. It's T code 850. 850 will recognize that payroll expenditure transactions which interface from Workday to SFMS. Batch number comes with PA, and then 3 digits indicates the agency number, and 2 indicators months, and last with A or B indicates the runs, run 1 and run 2, and it will use alphabetic if it is in even calendars, and will be numbers, number 1 or 2, if we are in odd calendar years. And here, pretty much T-code 850, it is the only time you can update your codings. Please make sure always review T-code 850 batches comes through to make sure everything came from Workday properly. Hit the correct PCA, index, AY, grant number, project number, and funds and effective dates. So you still have an option to update them and correct them. And T-code 851 will go through as well. When the interface comes from the Workday, this will create the account receivable for agency 107. Document type will start with RP. The payroll amount will be paid by DAS, agency 107, from the joint statewide payroll account on payday. And DAS will set up a payroll receivable for those amounts with T-code 851 while they are waiting the cash reimbursement from the agency. And payment for payroll payable for the agencies will go through with T-code 857. T-code 857 and 858 will generate in the same time from the agency to DAS from the joint statewide payroll account. So document type will be PI. Sorry, I need to correct this. So 857 and 858 will generate to transfer the fund from the agency to DAS. and we'll hit document type PI, and continues with the sequence numbers from D59 screen. And reference document will be the same document number that's posted T-code 850. And batch cannot clear until all the transactions are clear from the errors and there is enough cash in the agency's fund balance. We have two OIMs, OIM 4515. Please review this document. This is explained, comprehensive guidance for the agency's responsibility about the clearing the payroll batches in timely manner from the 530 screen. So we said T-code 857 and 858 will go through in the same time. So document type, it will be same as 857 because these two are the balance transfer. And again, batch would not clear until all the transactions are clear of the errors. So when all that happens, we have mass transit transactions go through as well. So the mass transit transactions are generated when T-code 850 PA transaction posts. Mass transit amount are generated by the payroll generator program once the expenditure transactions have posted. These documents come through with document number PM. And at the same time, an entry is posted for DAS for the mass transit payable by mass transit district with T-code 859. And the payroll generator program then generates transfer transactions for the mass transit portion using a PT document type and post T-code 862, 863. So T-code 862 mass transit payable will debit payroll payable and credit cash. It goes as document type PT and continues sequence number from D59 screen. This transaction transfers fund from the agency. And then T-code 863 goes in same time, recognize payment by SFMS agency for the agency's mass transit. And document type will be PT, and again continues by the sequential number from D59 screen. And the transfer of funds to the DAS for payment of mass transit amount to taxing districts. The batches cannot clear until all the transactions are error-free and there is enough cash to be transferred. There's some other payroll transactions can be processed. One is DAS reimburses agencies. This will be for using the opposite of the T-code 857, 858. We can use T-code 855 and 856. And this will be processed when agency wants to process the reduction of payroll expenses. And if we want to post a transaction opposite of the T-code 862 and 863, we can use T-code 860, 861. And this is for reduction of mass transit expenses for the agency. Because they are restricted, we cannot reverse that T-codes. So we have to use separate set of the T-codes. Here are most commonly used payroll T codes. There are more T codes, but these are the most commonly used ones. I just like to have a snapshot of it. And these are used by the Workday payroll to interface to our stars. So I like to highlight a couple errors we receive a lot of questions about. So very important one is cache error. When you see error code F33 or F34, this is always indicate there is no enough cache to clear the batch, payroll batch from the 530 screen. This happens when T code 857 goes through, and only a field can be updated its effective date. The agency emails SFMS, agency analyst, and requests for the update the effective date. If you don't have enough balance for this month, or the month is closing, then you can request to update the effective date to the next month. And one of the biggest no-no is please get used to review the batches with F2, not with F11, F4. We noticed the most of the data entry users, they are so used to F11, F4, and they even review the batches with F11, F4. This can cause problem because payroll batch will stamp the user's ID, and then over nightly batch cycle, the batch type 8 would not clear. If that happens and you notice the user's ID are stamped on payroll batch, please request from your SFMS analyst to resave the transaction and release it for you. And you can again review the OIM 4515 to just get a more understanding of the agency's responsibilities about payrolls, payroll batches. Then we have a fiscal year close. We just passed it 2-3 months ago. So, but I highly recommend tag this for next fiscal year close to just make sure, refer back, check our year-end guidance. Because in fiscal year close, payroll should not be posted in fiscal month 13. So if additional payroll expenditure related to fiscal year are not posted by the close of fiscal month 12, agencies should post the payroll expenditure in July of the current FY. And here we have a link to our year-end guideline, and please tag it in your calendar and review it for the next year-end close. I kind of touched on this issue. Again, I want to highlight, if you see error code EQA8, this shows invalid T-code user class. That means the user class is updated transactions. It doesn't have the proper security to edit or release that specific T-code. For T-code 850, we said agency has ability to update codings, but user need to use user class 27. If user use user class 17, then they will receive this error. Or if it is a batch with T-code 857, 858, any user class by the agency will stamp the user class ID and will prevent the system to clear the batch. Please make sure if that happens, contact your agency analyst to resave the batch with T-code 857 to allow the batch clear over nightly batch cycle. One of the important scenarios can happen, it is in job rotation. So this happens when state employees take a job in another agency, but their paycheck is processed in the home agency. So the rotation agency need to reimburse the home agency. The home agency should send information to the rotation agency with amount and all the codings related, all the comp objects are related. Please make sure it is not agency object. Comp object is important for this situation. So three scenario can happen with job rotation. One is home agency set AR, account receivable. In this scenario, they can set it with T code 135 and send the coding and amount to the rotation agency, and then rotation agency pays the invoice with BT document using T code 704, 705. Or the home agency does not set up the AR, and they can reimburse the, so then the rotation agency can reimburse the home agency with BTs, something like T code 740, 741 if it is receptive account, and T code 714, 715 if that's the treasury suspense account. And third scenario is home agency is not in RStars. So they are not using RStars for the accounting system. They have other accounting system. In this scenario, rotation agency is paying for the service. So they will issue warrant, and they're using comptroller object 4701 as other services, or they can use comptroller object 4500 as a professional services, non-IT, rather than a payroll object. Please pay attention. We really discourage the rotation agency from paying with an expenditure comp object and then reclassify it to a payroll comp object with using T code 415, 416. SFMS does not balance by comptroller object with payroll, but the auditors might. And this may be where the out of balance condition would appear. So this is very important notes. So the coding in payroll workday uses crosswalk to when interface hits the RStars, and the comptroller object is the crosswalk link in payroll, not the agency object. And here is the link to workday page. And if you have more question in that regard, please refer to workday page for more materials and information. So in summary, we said agencies can update document PA and PM. We said agency user cannot update documents start with PI or PT. And PI or PT document can only be updated by SFMS analyst. And we will only update effective date. And I want to highlight this. Please do not request to update any other codings because we are not allowed. We do not have authority. We do not have an access to update other fields except effective date. And that is because it will create discrepancies between T code 850, which I didn't establish the payroll expenditure in first place. And after that, as soon as T code 850 clears the 530 screen, other following batches cannot be updated because they will not match. It was a lot of fun. Fun subject. Any questions? It seems a little bit complicated, but if you just put all these together in line, you will see it's pretty smooth, pretty straightforward T codes one after another. And don't hesitate to reach us in any time for any questions you have. Okay, I'm not sure if Justin can pay me by beer. Maybe after we retired, Justin, tag it. You should pay me by beer for this session. But we are going to have Amber for balanced transactions.
Thanks, Maria. Let me see. We'll take control. Awesome. Well, we're going to dive straight into balance transactions from payroll. So our stars uses T-code pairs called balance transactions. We use them to transfer money from one agency to another agency, and we use them for correcting entries. We use them to keep things in balance. They're functional. They ensure that transfers in and transfers out remain in balance, and they aid in the preparation of statewide financial reports. But really, why do we use them? Because it's state policy, of course. A state agency will pay another state agency with an interagency transfer rather than a warrant, and this helps us reduce state banking charges. So let's spend a little bit of time talking about what they are. Well, they're always at least two transactions. The first T-code in the pair is going to be the sending. It's going to reduce cash in the transaction. And the second T-code in the pair is always going to be the receiving. It's going to increase the cash in the transaction. They're a little tricky in that they must be in the same batch. The pair has to be in the same batch, and they also have to be in the same document number. And then you have to keep in mind that the document total for a BT document will always be 0. There's a helpful note down there if you do have some balancing errors, but we want to remind you that they will always be 0. So, are there different types? Of course there are. That's what keeps it interesting. So there are quasi-external transfers. There are reimbursement transfers. There are operating transfers, and there are correcting entries. OAM 154510 is a great place to look when you're not sure how to classify the different types of transactions. But we're going to spend time looking at each one of these and just looking at an example to help us understand each one of those. So how do I know what goes together? If I have to have 2 of them, how am I going to know which ones should go together? Well, there's a balanced T-code field on the 28A transaction code decision profile, and it defines the 2 transaction codes that must be used together. So if you just go down there to the bottom, that little blue box will tell you this is the 2 that go together. Super helpful. But again, there's a bunch, and how could I choose the right one? Well, we're going to go back to asking ourselves some questions. Is it an expenditure? Is it revenue? Is it a transfer? Or am I making some kind of correction? What's happening in the entry that I want to make? Did we buy something? Are we getting reimbursed? Are we transferring something? Or are we going to correct something? The other thought that you want to think through is it within my agency or am I making the payment to a different agency? Typically, T-codes for entries within my agency are going to fall in the 400 series. And if it's going to go to another agency, it's going to hit the 700 series. But there are always exceptions to all of those things, and some of them do fall not in that range. So let's first talk about quasi-external transfers. Quasi-external transfers generate a payment for the purchase of a good or service, as though the good or service had been purchased from an outside vendor. So we're buying it from another agency instead of somebody on the outside. The sending agency or fund records the transaction as an expense, and this receiving proprietary fund records the transaction as revenue. So I have very complex examples for you today. Just kidding. They're very simple, but just to help us start thinking through it. Agency A is going to buy paper airplanes from Agency B. So I'm thinking about what is happening and what do I know? Well, I know that Agency A will need to record an expense. And I'm going to know that it's going to need to hit GL 3500 expenditure control. If I didn't, I'm going over to the GL spreadsheet and I'm looking through the word expenditure, expense. And then I know that Agency B is going to have to record it as revenue. So I know one half of my T-code pair has to hit 3500 for expenditure, and the other half has to hit 3100 for revenue control. So then how can I use this information? Well, I'm going to go, I told you guys I like it, the T-code spreadsheet, and look at it. I'm going to put in GL 3500 up here, and I'm going to filter all of my results to only what is true, because I only want the ones that do hit GL 3500. And then I'm going to do just the active ones because I don't want the inactive T-codes. And then because it is a T-code pair, for balance transfers, it's going to have it's going to have that field full. So I'm going to go over to the balance T-code field and I'm going to take out the blanks because I only want the results that reflect a T-code pair. And then because I know I'm going to make a transfer to another agency and there's still a lot of choices, I'm going to just take and clear out all the choices and only select the choices that are in the 700s. So there's still a lot of them, but I'm just going to go select each of them and only look at the ones that I would consider the 700 interagency series. That's not always going to be the answer, but it is in this case. So I've selected the 700s and now I have a shorter list. There's still a lot of options and we're going to look at those, but my list is shorter from where we started. I think I should have looked up how many T codes we have in the system. Okay, let's see. So then I'm going to narrow down my choices by looking at the title fields. I know that 3,500 I was looking at for the quasi-external expenditure. So I'm going to look at the titles and decide, does this title match? And so I'm going to cross off different titles that don't match because I am not transferring stuff out. I am not doing a suspense payment. And so I'm just going to go down the list and I'm going to cross out a bunch of them because I'm looking at the titles and they're not to ODOT. They don't have grants information. They just don't fit. And I'm going to keep the titles that say quasi-external expenditure. And then I'm going to go to my T-code spreadsheet. And so I've narrowed them down. And then I'm going to go to the 28A and 28B screen. And I'm going to look at our options. And I'm going to think through which T-code hits the right set of GLs. So keep in mind, we didn't assign for Agency A to have an AR. I'm sorry. Agency A would have set up the encumbrance and we didn't. In our fake scenario, there is no encumbrance and there is no AR set up by Agency B. But if we had set those up, then we would be looking for those on the 28A and 28B screen as part of the right choice. So encumbrances are always going to sit over here in that fourth set of debits and credits, and ARs are in the middle. So, all right, let's look at the different T-code options. So we have 700 and 701, and they hit 3,500 in cash, and then we have 700, quasi-external expenditure, unidentified receipt. So that's probably not our option. And then we're going to put in 704 and see the other half down there, 705, and that hits 3,570. This is really small on my screen. I wasn't expecting that. And 705, reduction of expense, so it doesn't hit GL 3,100. And then we will put in the next set. So we can see that it hits 3,500 and GL 70. So that looks right, except that it's encumbered. And so we see over in that fourth set of debits and credits that it is encumbered. And so We're not looking for an encumbrance, but it does hit revenue and it has an AR. So if I was looking just to see if it would hit GL 3100, it does meet that criteria. And then let's move on to the next set of TCOs from my spreadsheet. 722, quasi-external expenditure. And we can see the GLs that it hits, 3,500 and cash. ETs always hit cash. It's awesome. And then 723, the other half of that T-code pair. And this is quasi-external revenue, and there's no AR, and it hits GL 3100. So this looks like it could be a really good option. Hint, hint. And then we're going to look at the next set, quasi-external expenditure, encumbered. And so there's an encumbrance there, and it hits revenue, and there's no AR on the other half of that. But we didn't encumber it, so it's not the correct option. And then moving down the spreadsheet, let's look at the next one. 730, quasi-external expenditure, AR. And so it hits revenue, but there's an AR, and we are not using an AR. So by looking at that, I could cross this one off the list, but if I was using an AR, that would be the right option. And then moving on to 736, quasi-external expenditure, no AR. Again, those looks like the right choice. It hits the right GLs. And then we look at the other half, 737. And we can see that it's for a deposit liability. This one doesn't hit revenue, so it would not be the right option. And then let's look at 738. Again, there's no AR, so quasi-external expenditure, no AR. But it is a deposit liability, and it's not document supported. So again, that doesn't hit GL 3100, so we could cross this option off of the list. And then this last one, 740, quasi-external expenditure. Okay, so can't hear anymore. Can you hear now? Sorry, guys. Okay, so we can hear now. All right, I'm going to move on. Perfect. So we have looked at all of those options. Now let's choose the right set. Okay, so I am going to, where is my polls? What would be, I lost the rest of the polls. Awesome. Never mind. I had this really cool poll for you guys to look at, and I'm not sure it's not there. So there you go. But where are we looking for? 700 and 701, 722, 723, 730, 731, 736, 737, 738, 739, and 740, 741. Which option are we looking at? Well, we're looking at 722, 723, quasi-external expenditure, and then quasi-external revenue, no AR. So if the receiving agency had set up an AR, the correct answer then would be 730, 731. And so just make sure when you guys are doing quasi-external expenditures that you're checking those things and making sure if they set up an AR or did not set up an AR. Then let's talk about reimbursement transfers. When one fund reimburses another agency or fund, the reimbursing sending fund records the expense and the receiving agency or fund records a reduction of expense. So again, let's talk about paper airplanes. Agency A is going to reimburse Agency B for the paper airplanes they are using that were paid for by Agency B. So what's happening and what do I know? Well, Agency A will need to record an expense debiting GL 3500 expenditure control. And Agency B will need to record a reduction of expense crediting GL 3500 expenditure control. They're both going to need to hit that GL. So again, I'm going to go back to my spreadsheet, my T-code spreadsheet, and I am going to search start by searching for GL 3500. So again, I'm going to put GL 3500 up there, and I'm going to set my results for only those that are true. Since I know that both sides of the T-code pairs need to hit GL 3500 for this example, I'm looking for a set of T-codes that are consecutive. They have to, and I'm just going to start looking at the names. So I'm filtering to the 700s again, and there's a whole bunch of them, but because it's interfund, I'm going to do 700s. Click all of those. And I already do have my filter set for just active results and that they are balanced T codes so that I wouldn't get any other results, but I would just get the T codes pairs that hit GL 3500. And so then I'm going to narrow down my choices. They both need to hit GL 3500. So I'm looking for consecutive numbers as we talked about, or a pair that, and looking at the title to help me narrow down the choices. So if the receiving agency established an AR, I would look at 704 and 705 because I can see that they come in a set, a pair, and that they have an AR. The one says it quasi-external expenditure, and the other one says quasi-external reduction of expense. Exactly what I'm looking for. If the receiving agency did not establish an AR, I'm looking at 740, 741. I'm then going to go over to the 28A and 28B screen, and I'm just going to confirm my choices. In our example, it doesn't say that we set up an AR, so 740 and 741 are the choices that I'm going to look at. So I'm looking at 741, and I'm making sure that it hits the right GLs, 3,500 and cash 70. And then I'm going to look at the other half and look at 740 and make sure that it does hit the right GLs. I can go over and look the 28B screen, and I can look at just the description. I can then look at the comptroller objects, the document types, and the batch types that I need to use, and just make sure that the 740, 741 set of T codes would be the right choice. Moving on to operating transfers. With operating transfers, one agency or fund has the authority to collect and record revenue, and then another agency or fund has the authority, the appropriation, and the allotment to expend the cash. The sending agency or fund receives the cash receipt and records it as revenue. It then moves the cash to the fund or agency that has the authority to expend. The receiving agency or fund will record an expense when the cash is dispersed with the subsequent transactions. So let's look at it. Agency B is going to sell some paper airplanes, and they're going to collect the revenue. But only Agency C can spend the money. So what do I know and what is happening? Well, I know that it needs to hit GL 3500 operating transfers out control for Agency B, and it has to hit GL 3150 operating transfers in control for Agency C. So what can I do with that information? I can use the T-code spreadsheet. I've shown you that a couple of times, and I think it's a great place to look. I might also use the DAFQ A10 and look specifically at what T-codes hit that GL. I think it's really small, but I did want to show you guys just how you can, again, use Control F on that spreadsheet. That document, it's an Adobe PDF, but you could then filter for the different general ledgers, and then you could look at what T-codes hit it. I really like the example that is in OAM 154510, paragraph 123. I think it really walks through a great example for quasi-external transfers. So let's look at the T-code spreadsheet. T-code 710 and 720 look to be good options. It appears the difference would be whether the receiving agency created an AOR or not. So we are filtered to 3550 and revenue transfer out between agencies with no invoice or revenue. I'm sorry. Let me slow down. 710 shows revenue transfer out between agencies with an AR, and then revenue transfer out 720 no, it doesn't show an AR. So we know there's no AR on that one. Again, we need to check on the 28A and 28B screens to confirm that the other half of that T-code pair is going to hit the GLs that we expect it to hit and that it fits for our scenario. So agency C has an AR established, then I'm going to use 710 or 711 for my entry. But if they don't, I think I'm using 720 or 721. So again, we're just going to look at the GLs that the T-codes look at, they hit. So 710 and then 711. I'm going to make sure that it has an AR and it hits 3150. And so that looks right. So we can see the GLs that it hits there. And then we can move on to the other set. And we can see that if they don't have an AR, oh, just kidding. I should refer to my notes. We can look at the description on the 28B screen and we can see all the information that would go for 710 and 711. And then we could see the comptroller objects. Those are pretty specific for transfer outs and document types and the batch types. And we're just a little bit behind, so we're going to skip looking at the other half of that. But again, it shows that the GLs that we would look at to make sure that it would be the right choice for 720 and 721. So let's talk about correcting entries. Correcting entries are transactions. Goodness. I'm going to start one more time. Correcting entries are transactions that are to correct or reclassify earlier transactions. I know in basic TCO training, we went over some basic corrections. And so today we're really going to focus on the type of corrections that we would do if a balance transaction was entered incorrectly and if we had to make changes to that. So how can I correct an incorrect balance transaction? Can I reverse the original coding? Well, let's give it a try. So let's look at I think it's 720. It's really small on my screen, guys. Sorry, I did that wrong. But so we're looking at it and we're looking at the reverse field and we're looking to see, does it have an N there? Can you reverse it? If it's blank, that means that you can. And if there's an R there, that means it's required and you could do that. So we're just looking at 720 and 721 and we're making sure that we could reverse it. We're just going to give it a try, even see if it's an option. So you're going to look at it on the 28A screen. Is it an option? But reverse doesn't always work. See, reverse cannot be done if you are decreasing the cash of another agency. So 720, 721R, 720R and 720R, goodness. 720 and 721R would decrease the cash of another agency. So while it looks like the 28A screen would allow you to do that, R-stars will not allow you to decrease another agency's cash. You can't just take it from them. There's also scenarios where you would go to the 28A screen like T-codes 404 and 405, and the T-code just doesn't allow it. 405R doesn't allow it because it goes to a suspense account. And so we don't deal with suspense accounts in R-stars. You cannot pull money from it. So 405R would not be allowed. So the reverse, sometimes it looks like it might work, but it doesn't always just work. So we suggest that you reverse, in some situations, you can reverse only the incorrect side and then re-enter. So if agency A sends a transfer to agency B with T-code 720 and 721, so agency A did the entry, and then agency B discovers that the wrong coding is used, like the PCA or the general ledger or the fund or something like that, agency B could correct just their side. So the original, their half, the 721, has the incorrect coding, debiting GL 70 and crediting GL 3150. So they could use 721R to credit the cash and debit 3150. And then they could enter it with the correct information using 721 and debiting GL 70 and crediting GL 3150, and they could fix it. But we do want you to keep in mind, don't forget that there's the statewide balancing report and it might impact that. So we have to be super careful when we are changing balanced transfers. It's always just important to keep in mind that it might just be better to do it this way, because corrections assume that the GASB 38 codes are going to stay the same. But if they're different, then we have to do it. We have to do it this way. So agency A sends the transfer to agency B with T code 720 or 721, and agency A did the entry, but agency B discovers the wrong G38 coding is used. So having the receiving agency reverse out the BT exactly as it's entered to return the funds to the sending agency is always the best way. And then you can have the sending agency re-enter the correct information into a new batch. So this chart over here just walks through agency A and the entries that it would have made with 720 and 721, and then the GASB 38 being the agency number, BBB, and the D23 fund. And then agency B would just do the opposite. So they would back out the entry completely, and it shows exactly what they would enter here. And then agency A is just going to send the money back over, but the correct way. So we suggest that if you're at all thinking it might impact the statewide balancing report, that way we don't have any issues. And then for more information, you can see the transfer transactions in our SFMS desk manual. It goes over more information on the GASB 38. So suspense accounts, you could always check with your SARS analyst too. If you were curious about the statewide balancing impact, they're the best source there. I do want to just touch on suspense accounts and keep in mind that different T codes must be used for transfers that involve suspense accounts. They're going to be different than the ones that do not. Movement of cash out of a suspense account cannot be initiated in R-Stars. Only transfers into a suspense account are allowed to be initiated in R-Stars. So if an agency needs to transfer cash out of a suspense account, this must be initiated with Oregon State Treasury, and it cannot be done by a BT. For more information, visit our desk manual on suspense accounts transactions in R-Stars. And then I wanted to leave you just with some more resources specifically about transfer transactions or balance transactions, or as you hear them all the time, BTs. The Oregon Accounting Manual in 154510 goes over interfund and interagency transfers. The SFMS desk manual has a whole section on transfer transactions. The R-Stars training manual has a section on balance transactions or transfers. The R-Stars training program, if you haven't taken it, it has some really great information in course 5 and course 10, and it goes through more in depth just all that's happening on that 28A and 28B screen, because there's a whole bunch of different lines that we didn't cover today, but understanding why the different T codes might be the right choice. And so if you haven't done that, you should sign up for the R-Stars training program. And then there's just a balance transfer T code matrix just to be a help there. All right. Does anybody have any questions on balanced transfers? You can see that I answered all of your questions. That's marvelous. But no, I know we can't cover everything in the amount of time that we have today. But if you do have more questions, feel free to reach out to your SFMS analyst. And with that, I am going to pass the presentation over to Maria. It says Scott, but Scott is feeling under the weather, and Maria has graciously volunteered to step in and to teach us today so that we can still learn about journal vouchers. So your turn, Maria.
Hi again. Yeah, luckily, or sadly, Scott fell under weather, and luckily to me, I have to practice again and try remember everything. So I had a very short time, but pretty much I challenged myself and see how can I go through this. Please stay tuned, and hopefully we can go with not many errors. Okay, journal voucher. What is journal voucher? Entries to record adjustments for audits and accruals, entries to correct other entries posted in error. So pretty handy dandy. OIM will give us the big glance of all the T codes, categorize them. So T codes have some logic behind them, the way they are established. So based on OIM, T codes in the group of 400 and 599 are the groups landed for JV documents. So here we are going to recognizing unearned portion of deferred revenue and recognizing prepaid expenditures as actual, record capital assets, and general ledger clearing. These were in Scott's agenda. Okay, let's dive in. So your agency has a bill that was paid in January for revenue, and that need to be recognized throughout the year. So how we will record this revenue and how we will recognize the revenue. Again, always OIM will back us up. Please make sure have your OIM marked and in your browser, and refer back to them when you're selecting GLs or T codes. So in this scenario, it looks like we need GLs hits 1603 for our end revenue non-document supported ones and 1604 for document supported ones. More explanations are on OIM 6010. So with that, we know we need to filter our Excel list with GL 1604 or 1603. And here we will land it to a couple T codes. So based on OIM, we want to focus on group 400 and 500, right? So 973 auto reverse reclass accrued revenue to unearned revenue. It doesn't look what we're looking for, so we can cross that one. And if we look at 443 and 444 T code 28A screen, these T codes are balanced T codes, so they have to post it together. And this is not something we are looking for. And this pair is for moving unearned deferred revenue from one fund or PCA to another. So we can cross this T code. And we want to check T code 490 to 493. If we look at 492, we will need to know whether or not our unearned revenue is document supported. First, we will look at T code 492. This transaction code posts to the correct general ledger account, but it does not post to the document financial table. Per T code 28B, this T code will recognize unearned revenue established with T code 164. So we need to consider when we're recognizing the revenues, we need to take in consideration of the T codes originally posted to establish that unearned revenue. So you can use this T code if the original entry revenue established with T code 164. And T code 493 on 28A and 28B screen identifies for the situation that revenue established with T code 170 or T code 699. So let's map it out. Let's map it out to see how that will work out. So if we recognized our revenue with we establish our revenue with 164. That means we hit our debit 0065, and then we credit GL 1603, then we debit 3200 and credit 3100 revenue control cash. And after that, it was deposit reconciliation 332 system generated. We'll go through. Always pay attention to the system generated transactions, because if you remove that from the equation, everything will be different. So if we implement that, we will see, so 0065, it's ended zero balance. Looks like T-code 492 as recommended will work perfectly in this situation, because we'll debit GL 1603 unearned revenue and we'll credit GL 3200 gap revenue offset. So we will end up with the appropriated balances. In the other scenario was a revenue, unearned revenue were set up with T-code 170. In that case, again, take in consideration, we have a system generated 332 T-code when deposit reconciled. And with that, it looks like T-code 493 for recognizing the earned revenue. It's a best option. Now let's look at the recognizing prepaid expenditures. And this is, let's say, your agency has a bill that is paid entirely in one period, in one payment, but the expenditure need to be spread out over several payments or periods. Again, we want to back ourselves up with OIM 1540. Look at the OIM we landed to identifying GL 0602 for prepaid expenses and 3032 for non-spendable fund balance prepaid. So take these GLs. Now let's go to our Excel spreadsheet. And in this Excel spreadsheet, we want to filter our GL with 0602. I always recommend first filter your status. You don't need inactive ones because you cannot use them. So always filter inactive ones away so you can land it in better situation. And again, we want to focus on 400 and 500 series in these scenarios. And with looking at this, we have identified two T-codes of 500 and 514 will look good for this scenario. So if you look at 500 on 28A screen and 28B screen, these T-codes allow you to use, so you want to look at that GL, because this is an open GL T-codes. Again, this is an open GL because if on 28A screen, let me see if I can take control of these highlights. There you go. So here, 28A screen identified our credit, but will give us multiple options for debit side. So what are allowed to be used are identified on the 28B screen in this section. So we want a GL 0602, and yep, looks like that is correct. It lands between 0600 and 0602. So this is good sign. We can use this T code, and let's map it out. In 28B screen, it identifies you can use T code 510. Let me back, sorry. We did 500. And 510. Okay, looks like we don't have, oh, so this two looks like the slides are not in right order. So let's look at the T code 500. So T code 500 will be used for the expenditures are prepaid or established with T code 779. So since we established with 779, we have our GL3 500 debited, we have our cash credit, and we have prepaid expenses 0602 debit, and we have our 3600 gap expenditure credit. And as we map it, put 500, T code 500 in, we landing on the good balances, proper balances. And other scenario is using T code 510. I want to back because these two slides need to be switched. We will update this when we want to post in our website. But in this slide, we landed on two T codes, 500 and 514. So I'm not sure why 510 was identified here. But if the prepaid expenditure was set up with 698, it's looks like most appropriate T code will be T code 510 to get a proper balance, because 698 set up the expenditure control in debit, cash credit, set R0602 prepare expenses debit, and non-spendable fund balance credit. We got our change in non-spendables debit and gap expenditure credit. Pretty long entry. Whoever choose to use 698, good luck. Okay. So the other scenario we have is recognizing a capital asset. So your agency recently bought a motorcycle, such a fun agency, to give a motorcycle to the employees to ride. But again, we're back to OIM 1560. Oh, I think Caroline should be applied to this agency because she loves riding bikes. So she will have fun. On OIM, we see we can look at GL 3018, 3018 for net investment in capital asset. 3074, it would be change in capital assets. And looks like we have specific GLs for some important assets or high valued assets. And for 0816 GL is identified for the assets like cars, trucks, vans, or other motorized vehicles. So in this scenario, since the agency buying motorcycle, we are going to search for GL 0816. So again, we go to our Excel spreadsheet. It's easy to filter. We put in our GL 3074, and we want to land to the T codes allows us to use this GL. Again, filter inactive ones. You don't need inactive T codes. And here it looks like what we end up with. And when we're looking at this and looking at the descriptions and titles, it seems like 545 would be the best scenario to have here. So if we look at our 28 and 28B screen, this allows us to use GL 0816 as well as original GLs we were looking at would be GL 3074 and GL 3018. Looking at the 28A screen, you will see that this T code will allow you to choose a GL for the debit. And just a little bit small and harder to see. But again, you see in that GLs are allowed on 28B screen. It is the important information for us to pick the right T code. And again, let's map it out. Here is what the accounting entry will look like. So when the vehicle was purchased, T code 222 went through, and that debit 3501 and credit 1211, which is voucher payable, right? And then we had issued the warrant. We paid it in once, and we posted T code 380 for the issued warrant. That cleared the expenditure control and cleared voucher payable, but generated expenditure control cash, and our cash balance reduced. And recognizing the asset with 545, it looks the proper option in this case, because we'll put our motor vehicle, we recognize our asset, and we put our GAAP expenditure offset as a credit, and we have a 3074 GL, again, a change in capital assets increased. We bought the new asset, and GL 3018, net investment in capital assets is credit, yes, because that's counted as an investment. I don't know, with the current inflation, it is a really investment, because when you buy a vehicle, then it just crash quickly in the first mile. So now let's back to, we will occasionally have taxes coming due for a future fiscal year in the current fiscal year. So what do we do when the taxes come in, and how do we recognize them in the new fiscal year? This is very important entries. Thank you, Amber. Have you seen this entry before? This is fun because it looks so odd. You use the same T code and then R there. So you just select your answer, submit it, and no, 83% said no. Yeah, I'm not blaming you. Let's see how this entry even possible and happens. So general ledger account, we need for reclassifying taxes receivable. So we need GL 2951, system clearing general ledger level only. We have GL 0410, taxes receivable current year, and 0420, taxes receivable non-current year will be fiscal year. Okay, if we search in our T code Excel spreadsheet and look at for the GLs, hit the 0410, it's very clear. We're just landing with one T code, 474. And then if we look at the 28A and 28B screen, please just make yourself familiar with these two screens and just try, even if you don't have too much questions, once a while, try to review this screen, because everything you need about T codes are in these two screens. So here we check out and we see it allows reversal because that reverse field is blank. That means it is allowed. And if we look at the GLs for this T code are allowed are between which in our scenario, we want GL 0410 and 0420, and that's properly landed between 0330 and 0499, if I see it right. So that's how this came alive, this entry. We just have one T code, but this one T code has a, if you look at the number of the GLs are listed, it's significant. So we are allowed pretty much use it with many, many GLs when we just know we want a hardcore head credit 2951. So I think that's make this T code one of the most popular T codes. And additional resources for this subject, you can refer OIM 0535, OIM 6010, and of course, our T code spreadsheet. Most fun one. We use it all the time, every day. It's open in our desktop. Any questions?
Jessica did have a question that Liz answered one in the chat, but it was on.
I see.
Is slide 90 the slide that you were referring to? Can you just clarify the question?
Okay, I see that. Michael, I have one for sale if you need one. Sure. I'm not a motorbike rider, but maybe I need to look at the pictures. Maybe I can dive in, right? I need to start at some point. And example one is showing an invoice payment reversed by the agency rather than a bill paid by the agency. Is there a report in OB that can show what was on page 90? Page 90, are you referring to a screen, 90 screen, which shows all the errors? If yes, if you're referring to the 90 screen, it was a long time ago. I created a query that generated all the error codes. I can look into that again. Please shoot me an email. I can look into that and get back to you. But I remember in one point of the time, I created a query that listed all the error codes will appear on 90 screen if you mention 90 screen.
And Maria, there was a clarification from Jessica in there too. It sounds like Jessica's looking for a report that will show all the GLs and their end balances. There is a report in the OB repository, the trial balance, that will show you all the GLs. So if you're not familiar with the DataMart repository, you can email your SFMS analyst. But yes, there are queries in OB to be able to show you all the GLs that have balances for your agency.
Okay, thank you. Okay, I apologize again. Forgive me for any flaws. I bet if Scott was here, it would be much better. I just tried my best, and have a great rest of the presentations with Liz.
Thank you, Maria. Thanks for filling in. Everybody's done a really great job. I hope our audience is getting a lot of useful information. My name is Liz. I've got the last topic for our training today, which is accruals and auto reversals. So let's dive into that topic. All right. When I'm talking about accrual transactions, I'm really talking about those financial statement accruals that we record at year end. This is making sure that we're recording accounting activity in the correct period for financial reporting. So accruals are non-routine transactions. We're not doing them all the time. We're doing them at year end, so they can be a little bit more complicated. On this slide on the right, we have a table of some of the GLs that relate to accruals. There's a lot more. What you need to accrue for year end depends on the specific activity and how it needs to be presented in the financial statements. So we've got the GL list tool. Amber went over that before in the beginning, a great resource. It'll list all the GLs. It'll show exactly how those GLs will roll up into the annual comprehensive financial report, the ACFR. You can also get definitions for all of these different GL accounts in the OAM. The OAM has a glossary that has more information on those as well. So system generated auto reversals. If you've done accruals in the past, you'll know that many of our T codes and R stars that are used for financial statement accruals are set up to auto reverse in the next accounting period. So if you're entering accruals in fiscal month 12 and 13 for year end, the system is going to generate an auto reversal at the start of the next fiscal year. So this is just kind of a shortcut to save you from having to make an entry to back that out. We don't want activity reported in both accounting periods. So if you're accruing expenditures for fiscal year 25, it's going to auto reverse out at the start of fiscal year 26, and then you're going to pay the actual bill in fiscal year 26. We don't want expenditures reported in both periods, so that auto reversal makes sure that it's only going to be recorded as a fiscal year 25 expenditure. So not all of our T codes in the system for accruals are set to auto reverse. There is a way to check that on the 28A screen. So we'll go over that on the next slide. But an important note, when you're working on accruals, they're not routine transactions. Take the time to think them through. If the T code you've selected to accrue your activity does not auto reverse, you may still need to do another step to manually back out that accrual in the next year so that you're not double reporting activity in both fiscal years. So on the T code profile itself on the 28A screen, you can see whether a T code is set up to be an auto reversal T code. We'll include that information in the title. You'll see something there. We also have information. I've got a little red box about halfway down the screen. It'll show you the doc prefix and the T code that will be used when the system generates that auto reversal. So if you record a T code 436 accrual, this is a revenue accrual for year end, it will auto reverse out with a GA document and T code 981 at the start of the next accounting period. We also have some very specific agency resources for year end in general, but they also include a lot of information about accruals. So the SFMS fiscal year end closing guidelines, we talk about those in our user group before year end. We also have the SARS agency guide to year end close. That's on SARS website. Both of those are really great resources if you're involved in any fiscal year end processing for your agency and you're not familiar with these. Definitely take some time to go out there and get familiar with them. There's a lot of information in both of these resources that you really can't find anywhere else. So very good resources, information on specific accrual T codes and scenarios to help you pinpoint which T codes to use for your accruals. One last point before we get into a couple of quick examples. Accruals are really used to make sure activities recorded in the correct fiscal year accounting period. They do not have an impact on your agency budget. We get questions about that, particularly when we're closing an AY and a fiscal year, like we just did with fiscal year 25 and AY 25. If you want to look at the actual T code profiles, you can see this. I've got two T codes on here. T code 222 is on the left. That's the normal voucher payable T code where you're generating a warrant to a vendor. When you record that, it's hitting in the file posting indicators about halfway down the screen. It's hitting the AP table. The AP table is the appropriation table. That's the 62 screen if you're familiar with tracking how much budget your agency has available. Anytime you're recording a voucher payable, it's increasing your expenditures on that screen and it's reducing your agency's available budget. Now on the right-hand side, I've got T code 437. That's what you would use to accrue an expenditure at year end. Now this in the file posting indicators section doesn't have any impact to the AP screen. It's not impacting budget when you accrue an expenditure or when it auto reverses. It's not going to hit the budget until you're actually recording that voucher payable. So just an important thing to keep in mind when you're doing your year-end accruals, it's not going to have any budgetary impact. So I've got two examples. The first is a simplified example on how to accrue expenditures. The slides go through kind of that very step-by-step detailed explanation of how you would pick a T code. And I'm going to go through those pretty quickly because you've kind of seen that pattern. But if you're new to using accrual T codes or you want to walk through each of those steps, please look at those slides in more detail to kind of see how you would do that. The second example is a little bit more complex, and we're not going to go through each of the detailed steps for establishing a due to, due from accrual. So for our first example, we have a scenario where your agency received professional services that were completed prior to June 30th, but your agency had not yet received an invoice from the vendor. You expect to receive and pay the invoice soon, but not before month 13 close. You want to recognize the associated $25,000 expenditures for these non-IT services that were received in the current fiscal year, but you don't want to generate a warrant to pay the vendor until after the invoice is received. So pretty common scenario that you might have at year end. You've got expenditures, you're aware of them. They relate to the closing fiscal year, but you may not actually pay the bill until the next fiscal year. So we would go through the normal steps of identifying the type of transaction you want to record, the specific GL and comp objects to use. So I've got it detailed here how you could identify which GLs are going to be important to use for that transaction. You can narrow it down with the information in the OAM to see what GL accounts you want on the debit side. You would do the same process for the credit side to see which one would be appropriate. You may have more than one you need to review to see which would be the most appropriate GL. You'll also need to identify the specific comp object you need to use for the accrual. Look through if you're not sure of what comp object to use. The OAM glossary has specific definitions that you can look through and find the one that's the best fit. An important thing is, you're going to be paying this invoice. If this is a vendor you've done business with before, you might already know what comp object you're planning to use for that entry. You want to use the same comp object on the accrual so everything lines up. So once we have the GLs that we want to use for that, we can then go to the T code spreadsheet and narrow down our T code options like you've seen before in some of our prior examples. Or as a shortcut, you could also look at our SFMS year-end guidelines and see if it gives you more information there. Our year-end guidelines have the most common T codes that are used for accruals, so you may be able to save yourself some time by looking at that resource first. But if you wanted to use the T code spreadsheet, you could input the GLs, comp objects that you're looking for the entry and narrow down the list to find the one that's right in the specific case. So in this one, we know we want to record this as an accounts payable, GL 1215. We want to use comp object 4500. We have 3 T codes to choose from. Looking at that T code, the first one on the list, 437, is the one that's going to match our expectation best. So we can review on the 28A screen. We see that this one auto reverses. We can identify what fields are required for the entry. And then we can prepare the entry, get all the information together, what document prefix, all of that information you need to be able to enter the transaction into the system. And as a last step, if you're not sure what user class to use, you can go to that user class tab in the T code spreadsheet and find out which user classes allow it and see if you have any of those user classes to make the entry. And then we have the end results of the entry here. The first item is the current fiscal year. We've got our T code 437. You can see it will auto reverse the next fiscal year. No action is needed on your part. The system will do that automatically. And then you can pay the vendor. So we'll have that activity at the end correctly reported. Steps 2 and 3 will offset each other in fiscal year 26. So we'll only be reporting the expenditure for fiscal year 25 financial statements, even though we're not making the payment to the vendor until fiscal year 26. Due to and due froms, these are short-term amounts owed by one fund to another within the same agency or owed to one state agency, from one state agency to another. There's specific GLs that are used for that. GL 0586 is the due from GL. GL 1532 is the due to. So when you're making due to, due from accruals, we get lots of questions about those at year end. They do require a specific 8-digit agency GL number to be entered with them. It's similar to the G38 number format that some T codes require for transfers, if you're familiar with those. And that's what's used to make sure that whatever is recorded as a due to has a matching due from across the state. SARS creates the statewide balancing reports to make sure all due to, due from accruals are in line and everything is balancing. And I do want to note, we've gotten questions about this before. We are doing a joint training with SARS next year in April, specifically on statewide balancing reports, G38s, how to correct common errors. So if that's something that you work with, definitely look out for that training. So we do have an example here of a due to, due from. If your agency had set up an AR to another state agency using T code 174, the other state agency hasn't paid it as of 6/30, you need to coordinate with the other state agency to record a due to, due from for the transfer. And then the other state agency is going to pay that invoice in the next fiscal year. So you would follow all the same normal steps that you would for any process. Some important things to consider here. Your agency already has an AR recorded on the books in GL 0501, but for fiscal year end, we need to have that amount reported in GL 0586 because it's due from another agency. So whenever we're putting together our entries, we need to make sure we're not double counting the AR and reporting it both in 0501 and 0586. We could cancel the invoice and reset it up the next year, but we really don't want to do that. We know the other agency is going to pay that invoice the next fiscal year. So we're looking to see what accrual options we have so we don't have to zero out the invoice and set it up again the next fiscal year. You'll need to coordinate with the other state agency as well to make sure that they have the matching GL 1532 entry. So I don't go through all the steps to get these T codes, but really the best place to find this information is in the SARS year-end guide. They actually have this specific example in there. So again, the SFMS year-end guidelines, the SARS guidelines can be a really good shortcut. So this maps out the entries for our agency. We've got the first line with our invoice recorded. Steps 2 and 3 are our accruals. Steps 2 is going to offset the AR we have reported in GL 0501. We're recording it in GL 0503. Both of those GLs are accounts receivable and roll up the same for financial statement purposes. So this will allow us to not have to actually cancel the invoice. And then we'll set up the due from accrual in step 3 with T code 920. And then the next fiscal year, both of those T codes 927 and 920 will auto reverse. And then we'll have that invoice still showing as needing to be paid from the other state agency. And on the other state agency side, there's a little simpler. They just have to record the T code 919 to show that they have a due to, and then that will auto reverse. So both agencies need to put in proper G38 so everything balances, and then the state agency could pay the invoice as normal with T code 708 and 709 in the next fiscal year. Any questions? And I know we are right at 12, the end of our training, so I'm going to pass it over to Justin to close us out.
Thank you, everybody. Thank you for participating in the chat. Thank you for attending our training, and thank you, presenters, for presenting a lot of great detailed information about T codes. Hopefully everybody found it useful. And I will do a shameless plug. Please, if you can, take a moment, fill out our survey. That helps us provide you training and materials that you will value and be able to use. Thanks again, everybody. Take care.